Welcome to the Fintech Times Presents series of webinars. Established in 2016, the Fintech Times is a global multimedia news outlet centered around the world's first leading fintech newspaper. We report on the latest and brightest ideas from the fintech world. Firstly, I'd like to say hello to our online audience and welcome them to today's session. Today, we are looking at challenges green banking. Follow the conversation using the hashtag Fintech Times Green Banking and follow us at the Fintech Times. With a more world-conscious focus and the ability to micro-invest, green banking has moved away from eco-warriors to millennials. This green banking webinar looks at how fintech has made it easier to be an ethical consumer, from purchase power to savings and investment. How are platforms and funds bringing together green banking into focus? As well as helping the environment, ensuring positive changes for the planet, such as planting trees or reducing pollution, green banking is now something even high street financial institutions want to play their part in. We have a great group of people for today's discussion. I'd like to welcome on screen Tim Coates, co-founder, Chief Customer and Regulatory Officer at Oxbury Bank, and Thanos Bismpigiannis, Head of Product at Plum, and Adrian Rimmer, Partner at Finsbury Glover Herring and an ESG and Sustainability Specialist. Thank you all for joining me. I'd like to start by asking each of you to give me a short introduction. So good morning, Tim. Do you want to start?
Morning, Gina. Yes, so my name is Tim Coates, as you introduced me, from Oxbury Bank. We are the UK's only 100% dedicated agricultural bank. We were recently authorised in 2020 by the PRA and the FCA and went live this January 2021. As a completely dedicated bank for British farmers, ESG, or sustainability, or whatever we would like to address it as, is at the very core of who and what we do. We are exposed to one of the core sectors that can both has to address its role in the environmental impact of human activity on the planet, but also is one which gives a huge amount of options in terms of being able to address that. It is also a key sector in the wider society for the UK, the rural economy and society, of course, forming a huge important part of the fabric of the British countryside and our wider society. So we have a really important role to, as a specialist bank, to face off against those challenges and opportunities in this wider space.
Brilliant, thank you. And Thanos, do you want to introduce yourself?
Hello, Gina. First of all, thanks for inviting me on this panel. My name is Thanos, I'm Head of Product at Plum, and Plum is the ultimate personal finance management application. And what this means essentially is we're in a mission to help customers save and grow their money by using the application. And we do this by helping them understand their spending, giving them the opportunity to save money in an automated way, but also giving them the opportunity to grow them through investments. And I think we'll get to the details of that as part of our discussion around the ESG investing theme that we are discussing today. Essentially, our customers are getting an autopilot for their personal finance management needs. And in a single, very easy to use app, they get smart saving, investing, and also the money management optimization that they require for their life. It's very interesting from a consumer perspective to see how the ESG as an opportunity to invest in specific themes has evolved to the consumer level from our side, which we get to see a lot, and how we're evolving this service to make sure that our customers are getting served the way they expect.
Excellent, thank you. And finally, Adrian, do you want to tell us a bit about yourself? Oh, I think you're on mute there, Adrian, sorry.
Hi there, and thanks for having me. I'm a specialist in ESG and sustainable business at Finsbury Glover Herring, but my background is largely in the banking and finance world, and working with organizations to build a commercial sustainability offering as part of that. So most recently, I worked with London Stock Exchange Group to build a sustainable finance platform as part of their work in this area. So that included supporting all of the companies that are listed on the market with understanding best practice in ESG, what investors are looking for, and what regulation is coming down around the corner. But it also involved looking at attracting, green, clean technology and green fintech businesses to the market as part of our growth strategy in that area. And finally, then looking at innovations in bond markets in particular to help all companies transition their businesses and invest in the technologies that they need to transition to a low carbon economy. But more broadly, I've worked in the investment banking world across different asset classes, again, with a sustainable theme. And I see, great opportunities in new markets that are developing and new applications of technologies to these markets in the fintech world that can be of great use.
Excellent. Well, thank you very much. I think it'd be nice to sort of get an understanding from all of you of the type of products that you offer. Tim, do you want to start a little bit? Obviously, you've got ESG at the heart of Oxbury. Do you want to talk about why that's come about and the type of products that you can offer?
Yeah, absolutely, and it's fair to say actually that we also have fintech at the heart of the proposition. So, as a brand new bank that we built from scratch ourselves, we've designed it such that we can offer really bespoke products to our key target audience, which is the British farmer. And that allows these to be incredibly bespoke, but also incredibly data rich. And obviously data and the ability to verify and assure that data is a key part of ensuring that we have proper ESG deliverables. So as I said in the introduction, British agriculture is in quite a unique position in terms of its role within the ESG debate and movement. And so we offer essentially, two core lending products to British farmers at present. So one is a typical sort of term loan proposition, but we divide that into certain strands, and some of which look very directly at things that may relate to ESG. So that would be rural power generation, for example, and using renewables, or productivity and efficiency enhancements in farming systems that reduce energy or chemical input requirements. But we also look at how any changing activity against a term lending proposition on farm has an environmental or social angle to it. So that's part of our data collection when we onboard the customer. The ultimate goal in the future is to link that to our own credit underwriting approach, such that those farm businesses that are becoming more sustainable and increasingly responsible are rewarded for doing so. That is our long-term approach with that. So we want to incentivize the right transition with our farming customers. Our bespoke and flagship lending product is something called Oxbury Farm Credit. It's a working capital revolving facility, and fundamentally what it does is offer the ability for farms to smooth their cash flow. Just a quick thing about agricultural finance, which might be quite obvious really, is that it takes quite a long time to see the output of production. An autumn sown crop does not get harvested until the following summer, for example. Livestock take time to rear. So there is a seasonality to cash flow that we need to address through our lending products. Again, what we can do using the fintech element of what we've built is monitor all of the input transactions on farm that are purchased in conjunction with our system. And we therefore know actually what the agronomic activity is on farm from both a sustainable and a financial position. So we have really, really rich data on our farm customers that we also then re-expose back to them so they can benchmark themselves and understand where they fit in the market, and again, and how to improve practices and go on a continuous journey towards improvement from both a sustainability but also a financial perspective. That on the deposits taking side as a bank, obviously we have the other side of the balance sheet. That's a mass market proposition. So while we do offer market leading rates to farmers by paying them a special bonus rate for the dint of being a farm business, we offer a general market proposition to anyone who wants to save to support British farming. And we think it's really important that we're clear that actually that is all we do. So anyone who saves with us is very clear about what their money is being used for. It's there's no opacity, not to name names, names, but any of the large high street banks, if you save with them, you don't really know what that savings being necessarily used for in their wider operation. Whereas for us, it's transparent from the start because we only lend to British farmers. And what we're doing now is expanding that proposition to make it even more precise. So just last week, we launched our new product called Oxby Forest Saver. The flow of funds from that savings product is entirely into planting on British farms of trees, that is, on which will all be verified by the Woodland Carbon Code. So we'll be generating carbon credits. And the idea of that is that a saver, frankly, at this time, should be able to make a decision about whether they want a financial return or a sustainability return. The return that we're offering is a mitigation of carbon footprint through that product. And we're looking forward to moving that product forward, but also we've got wider products in the savings market in the pipeline, which will also start to address some of the social goals that need to be seen in the rural economy.
I think the wider markets now that consumers have when considering ESG goals is amazing compared to where it was sort of even 1 or 2 years ago. Thanos at Plum, you've obviously expanded your offerings. What ESG solutions do you have at the moment?
Yeah, sure. So before we get into the solutions, I would just like to point out that from a Plum perspective, the social part of the ESG is something that we'll be focusing a lot from the very beginning, even beyond investments, right? We have a very strong social mission at the core of the product, helping customers to save and grow their money. We have identified that savings is a big problem in the UK and beyond, and people have challenges on making sure that they can save enough for the near and the far future as well. But beyond that kind of transitioning into the investing part of the application, we started from the very beginning of offering like investment propositions to the consumers, having like an option to have an ESG focused fund that provides like investments for companies that they have specific requirements to fulfill. And what we gradually saw is that more and more consumers will come and ask for more options. So one fund with some specific type of assets is good to start with, but then gradually people want to have more options still within the framework of ESG, right? So we recently launched 2 new investment funds. One that we call Growth Ethical, which is a mix of equities and bonds with a global remit as an offering. And we also offered like a balanced ethical fund, which gives you like equities across the world where you can invest in all of them within an ESG strategy managed by professional fund managers. So we keep enhancing like the opportunities for users to invest in different strategies, in the sense that ESG is the framework, but it's still an investment, right? So customers have preferences on potentially specific sectors or regions or types of assets that they want to invest in, still being aware that their money are invested in things that promote environmental, social, or governance initiatives. We did a survey towards the end of last year, and we saw some really strong demand on these kind of offerings. And that's why we started giving a bit more targeted strategies on specific ESG frameworks, these 2 global ones being 2 of them, but we are looking to expand them further as well in the future. And just an example that more than 60% of the investors that we surveyed, they gave either like an ESG or a clean energy fund as one of their 2 top preferences across a variance of multiple funds that we asked them for. So I think there is a very strong demand from customers. Now, starting from an ESG strategy, like which is very vague, to be frank, and can have like a lot of different meanings and different interpretations, into customers being more specific on what they're looking after. So we see this demand, especially from customers who are younger, like the Generation Z and the millennials, and which constitute like almost like 70-75% of our customer base. So we can see like this social, not really trend, but like the attention that specific age groups are paying into where they want to put their money and where they want to invest in, essentially.
I think that's really important that it's being driven by a younger generation, in essence. Adrian, when it comes to working and advising fintechs and other large corporations, are you seeing a demand from the top down for ESG products that they can offer? You know, are they being directed by the new generation, or are they trying to compete with the rest of the market?
It's a really interesting space right now, because there's a real mixture of companies, where companies are on the journey in terms of ESG. I think some of the new younger companies, they get this and build it into their core business from the outset, and we've seen examples of that, you know, today. For many others, they're at a much earlier stage of the journey. It's about changing the way they do business, and so you know, the advice we give will really be dependent upon the way in which that company has operated to date, and where the most material issues it needs to deal with are. So often, you know, we'll work with companies to help them identify what the most material issues are in terms of their stakeholder groups, in terms of their clients, but also what investors are looking for. And then we'll look at mapping that across to what their products and services are, and how they are delivered. So there's two lenses we tend to look through: are conduct. So how do you operate your business? So that's when, from an ESG risk perspective, you know, do you understand the impact you have on the environment, the level of governance required for giving people confidence in your business, and the sort of social dimension in which you operate. And then secondly, what are the products and services you have, and how can you green those products? And so it's a real mixture of those, but it's really important to focus on the product sets. And so we've seen a lot of focus on new market opportunities. I mentioned the stock exchange really looking at attracting green businesses to its markets as they would need to raise capital, but also in other cases working with banks and those in new markets. Carbon credits were mentioned there. You know, actually looking at you know, what are the dynamics of these new markets? What infrastructure do they need? What supporting products will they be required? What investment opportunities are there for retail investors? And so really we look to break down those different aspects of these new markets, where they're relevant to our clients, and help them understand where they can play within that world. So, you know, is it about infrastructure provision in trading, you know, biomass, carbon credits, etc.? Or is it about having an offering, say a credit card company that might want an offset-based credit card, where instead of getting loyalty points, you actually offset the emissions from those purchases? So there are a whole range of different areas we can get involved with in that. And what we see is, you know, really strong appetite. It is driven by the younger generation, and one of the things we've seen a real trend in asset owners, so pension funds activities in this space. They're being driven by the very long-term time horizons that they operate to. So they have a 100-year investment horizon, so they need to be looking at this. But actually, many of the advisors that are coming, that's helping those pension funds understand that universe, are coming from the younger generation themselves. So that younger generation who is very passionate about this space, and, you know, is likely to be the most impacted by things like climate change, are really driving the agenda within pension funds. That in turn is requiring, you know, them to change the mandates that they put in place for asset managers, and though in turn they're seeking new investments in this space. So you know, the more that companies can understand that dynamic and look at where the opportunities for new products are, or changing the nature of existing products, then that can be incredibly helpful.
I think both yourself and Thanos raise a really good point. You know, there is a huge amount when you look at ESG of where people could put their money. And I mean, Tim, you've gone for quite a direct stream. It's niche. It's, you know, it's backed by the Woodland Trust, and you know exactly where it's going. But then with Thanos, you know, you've got a wider aspect with Plum, where you're looking, it's a managed fund essentially. What advice would you give consumers who are maybe starting this path, I guess, towards more ESG savings and investments? Where do they start? I guess is the question. Where should you look? I don't know. Maybe Thanos, do you want to take that one?
I think that's a very good question, Zina, in the sense that I think we are not yet at a place where like the ESG standards or like an ESG framework is there available for a consumer to look at and understand and compare. I like to compare like from an investment perspective, right, which is still a very complex subject, right? I mean, it's very difficult even today for people to understand how to make decisions on investments, even though there is a lot of progress on giving access to users to invest in things, right? But the way I'm thinking about it is today there are like all these accounting standards that somebody can go and compare like company A with company B, right? And you can see how much revenue one company generates in the sector and how much like a competitor generates. And you can get even a rough feeling of where these two companies stand on this specific way of reporting, right? Unfortunately, there is no such thing like that yet in the ESG side, right? Like different fund managers, different companies may report things differently, may present things differently, which makes it a very challenging process for a consumer to gather all this information and make like a really conscious decision of where they want to invest in, right? There are obviously like very good initiatives currently happening from different perspectives. I mean, recently, I was reading about like the Sustainable Finance Disclosure Regulation in EU that will provide like a framework on how fund managers will report on anything that they market as an ESG, right? And this is a very good first step, essentially, to start to get standardizing this communication. And to be frank, the standardization is how do you make these things which are like really complex concept, right? Talking about like material life cycle, like carbon footprint, even in the social and governance, it becomes even more complex things, right? How do you assess these things? How do you present them? How do you make them easy to communicate for a consumer to look at them, read through them, and make a conscious investment decision on their side? So I think there is a long way to go still. What I really think is a positive sign so far, which we see a lot from a consumer perspective, is younger generations being raised in a period where more and more frequently, like the effects of, the environmental problems that we may have because of wildfires or floods. And I mean, we read them more and more frequently the last few years because they happen more frequently, but also because they are more accessible through the internet, right? People get to know what's happening on the other side of the world on a click of a button, right? I think they've been more conscious around these problems, and they have been more active on how they can help at the individual level on resolving these problems, right? And it all started by people changing their consumer behavior. You pay attention on what goods you buy, where they come from, the origin of the material, if they're recyclable or not. People are more conscious on recycling or reducing how much they consume. And now with getting more access into investments, combining like this knowledge and this awareness with access to investments, now help the customers apply this knowledge and awareness into the investment part of their life, right? And they can see how this relates into further down the cycle, their investments may reflect into like a better environmental situation or a social or a governance situation, right? So to me, the knowledge is there, the access is there, is how do we create the standards to make this like accessible in the sense that it's efficiently consumed by the user. I think this is the challenge that we are now facing. And I'm really looking forward to all these standards getting established and adopted by the wider like fund market and companies so that we are able then to offer this access to our customers.
If I can just come in there, I think it's I completely agree with what you're saying, Thanos. The particularly from a retail perspective, the clear communication that's required about these very complex issues is vital. I mean, in the broader institutional investment market, there are now $35 trillion of assets under management worldwide that are aligned to ESG strategies, but they are very different. And they are reflective of the needs of the investors that are using them. So by that, I mean, for a big pension fund, they want to invest and they're required to invest in a broad cross section of the market. Thousands of stocks within a passive fund, for example. Within that, they need to be investing in sectors that a retail investor may choose to exclude. So they will want to be in the energy sector. But so what they're doing is they're using ESG parameters to really look at best in class, who is transitioning their business model fastest to a zero carbon approach, who is taking better account of social dimensions. Now that makes perfect sense for those organizations, and there's increasing evidence of the value of that. We see that those companies who score well and behave well in terms of ESG matters, their businesses outperform the market, generally speaking. And they do that because they have a better line of sight to what is changing in the market and are adapting more quickly or managing risk. Now, we did some work for the UK government, really looking at how they would articulate ESG funds for retail investors, and that's very different, because actually, a retail investor will look at a fund and they say, well, how come there's a power company in here? How come there's an oil and gas company in here? And it feels wrong from a retail perspective. And so, explaining that there are different investment strategies around exclusion. I will invest, not invest in certain areas because it contradicts my view of where I want my money to be going. Or I will be proactively investing in specific areas, so companies that are generating green revenues from new products and services, overweighting them. Or I will take a view of a particular sector and sort of divide my portfolio up into a number of different areas. So to do that, we need clear communication, we need rules, and I think we need some kind of clear standard for those types of investment that enable customers on the retail side to understand what that means and select accordingly. Underlying that, we also need better data. So the point that was made around ESG data, this has been, over the last 2 years, really become something that's been more important than ever. Data provision has been around for a long time, but the investment grade quality of that has been very poor until recently, and it still needs to be improved. But what we're seeing now is the standards bodies, such as SASB, GRI, CDP, of alphabet soup of standards, but actually the main standards are starting to come together. They're enabling companies to report against several standards in one go. They're being more transparent about their methodologies, and they're capturing data in a more consistent way. I think it's very important that all players in the industry really help to drive that global comparability and consistency. And from there, we can then take the next step down to explaining to retail investors what those products are about. But there's a journey to be had in that.
Yeah, I think it's interesting because what I'm hearing is it's that word proactive, and I think the consumers that are interested in ESG are proactive. And I mean, I guess Tim, from your point of view, when you launched the savings scheme, what kind of customer base were you finding? Were people actively seeking you out because of your values?
Yeah, so just before I answer that, just to pick up the thread from before, I think this tells us why just using ESG as a framework is useful, but actually it's sort of in reverse of the way we normally talk about it. So what I mean by that is that governance is key. So in so far as if you're a retail investor, say looking for a fund that you think aligns, you need to understand how that fund manager is run and how it itself is aligning itself to an ESG profile, and therefore how it is making selections for that given fund within which there will be ESG profiles of any given asset within the fund. So there's already sort of 2 layers of transparency that you have to sort of get through at this point. And of course, what we're actually sort of talking about is thematic investing here, which is interesting because actually the big piece of sort of consumer education to the retail customer over the past sort of 5, if not 10 years has been thematic active management is not necessarily going to get you the best return. Very much there's been the drive to passive investing and all of the financial returns that have been seen to be better from doing that strategy. That passive market is lagging currently behind the active managed market on ESG. And that I think if that passive market can catch up, that's when we might see those two potentially at the moment slightly different incentives, so financial return versus environmental and social concerns coming together, and that comes into our proposition, which again is keep it really simple from our point of view. We have a core mission which is very transparent, which people can get behind, in terms of supporting British farming, which is an industry which is on a transitional journey itself. And needs to be supported to do so, but it's transparent what we're doing and why we're doing that. As regards the specific Oxby Forest Saver products, as we looked into that, yes, there was demand for a product that allowed this ability to, again, come back to, do I want a financial return, or do I want a return that's something a bit more intangible in terms of the output from a savings product? Of course, a savings product is non-consumptive, right? So unlike when I go and buy my flight with, say, British Airways, and I tick a box at the end that says, please offset this, British Airways, and I'll trust that you'll do that in a nice way that I have no real visibility of. This is again about a transparent, simple, non-consuming product. And we did research ahead of landing it in terms of the consumer market, actually, to test skepticism. And the quite interesting thing we found with that is that there was a general skepticism that a lot of what is being heard from companies in all sectors in this market might be in danger of the dreaded greenwash. It may just be people saying things for the sake of saying them rather than doing things. And interestingly, what we found there is that the concern of that was sort of split, sort of generally in the younger consumers, so those below the age of 25, but also then actually spiked up again in those of retirement age, with the more trusting, shall we say, being between that. So there's a real drive, and that's interesting, of course, because not only is there that drive from as we've talked about, from the younger generation, who, as we've already discussed, but typically the largest wealth is currently sitting in that other population, and they need to be supported in understanding how they can have transparent access to simple products that meet their specific needs, which are obviously quite different from a financial perspective based on their life stage.
Well, that actually brings me nicely onto our final question, and that's what advice would you give for both consumers and investors when considering a green banking or ESG alternative? Tim, do you want to start?
Well, I think I'd just go sort of to that point, which is, to some extent, it's as ever, any form of investment advice, which this is not, it should start with do your research. Don't just accept what others are saying, and until the alphabet soup of standards, as Adrian put it, is more aligned and more transparent and easier to navigate through, perhaps initiatives through companies like Plum, then just it's a bit of as ever, buyer beware. Look beyond the headline, and see if you can understand what the proposition is simply. And it's something that you feel like you want to get behind. Of course, make your investment, take out your savings product. Sign up for a credit card with whoever is the provider that aligns with your goals, as long as you can understand how they're helping you achieve them.
Thank you. And Thanos, same question.
Yes. So I think I pretty much agree with what Tim mentioned, right? Unfortunately, given the lack of a common standard, or like a more like transparent and straightforward way of communicating these concepts and how they work, it's definitely required like a lot of research from a user perspective, making sure that they really understand what they're buying into. But also never forgetting that this, on the investment side, it's still an investment, right? I mean, and we've seen that, customers really believe in and want to support like ESG initiatives. And to be frank, it's proven during the last more than 10 years that you don't really have to lower your expectations on returns of investment, right? By following like ESG frameworks. There've been like more than a few success stories on funds and companies that they follow like a very strong like ESG strategy, and they end up providing some good returns for their investors. So never forget that it's part of your investment, right? And this has like the risks and the growth potential that every investment includes. But yeah, unfortunately for now, a lot of these research relies on the consumer, which companies like Plum, we try to make it better and easier to communicate based on what is currently offered. And gradually, as soon as we see like more common adopted standards or ways that we can easily communicate, the value proposition and, what the companies are focusing on, we will be definitely doing a lot of work to adapt this to what the users are waiting to see, right? And what they expect to see before they make an investment decision.
Thank you. And Adrian.
Yeah, I would certainly agree with what's been said already. This is a new area for investing, and there are many themes that people can choose. So understanding what it is you're trying to achieve, and understanding what part of your portfolio that is that's most appropriate to is really where you start. And it's where you start with any investment, right? But I think in the green space, you then need to think about, do I want to make some specific, targeted investments in companies that I think are really interesting, that have a solution that I think is really required, and then that's your own research and due diligence on that. Do I want to just put my whole portfolio in something that's being managed in a more sustainable way and overweighted towards best-in-class companies, but actually right across sectors? So it's not about green investing, but it's about orienting towards companies that are managed in a more sustainable way, and really thinking about that difference between product and conduct, because that's those are the very different things. We often hear about perceived inconsistencies between ratings, but actually often that's because people are looking at it's a green company because it might make electric vehicles. That doesn't necessarily mean it's a well-run company, and actually you need to look at different dimensions to see if it's well-run. And so what are you trying to achieve? So being very clear with yourself about your strategy and where that fits in your portfolio is absolutely paramount, and then the sort of diligence associated with that. But the good thing is there are a growing number of products in this area, and everything from orienting around traditional exclusion through to proactive investment in green companies, through to things like really quite sophisticated, looking at sustainable development goals. What companies, products and services contribute more to sustainable development goals, but at the very early stages. So I think as we've heard, there's a need to be really clear, and then to engage with those companies or those funds and understand what's behind the headlines, as Tim quite rightly said. Our job on the flip side of that is to help companies articulate that offering in a clear and transparent way, so everybody's comfortable with what they're getting.
Definitely. Well, I mean, for me, green banking is just an exciting space because you never know what's coming up. But I do agree that we need some more transparency around regulations. So I look forward to those coming across. I'd like to thank all of you, Tim, Thanos and Adrian, for joining me. And if you are watching online, then don't forget you can follow the conversation using the hashtag Fintech Times Green Banking and follow us at the Fintech Times. Thank you again, everyone, for joining me.
Thank you.
Thank you.